Very good morning, and hope the things are going very nicely. Yes, as I say in my last session, that this means the coming lecture will be the last lecture of admission of a partner. In this lecture, we are going to learn something entirely new, something which you cannot even imagine. Yes, a unique topic. Even you can also understand from the size of format. The big revaluation, small capital, no cash or bank, and a normal balance sheet. Yes. There's much big memorandum revaluation account. What is it? Memorandum revaluation account. Okay? Now what is memorandum revaluation? Revaluation is okay. Since chapter 4 we are learning all these things very smoothly. But a new word is that memorandum. We heard this word. We'll learn about memorandum in Organization of Commerce and Management, even in SPCC also. Yes, few documents needed for company, and one of the main document for registration of company is Memorandum of Association, in which 6 different clauses are there. Capital clause, then name clause, registered office clause, all this different. But that is the topic of Organization of Commerce and Management, OCM. In this accounts, here it is not at all connected with that memorandum. Here what they are saying, see in your textbook, it is given on page number 169. Here we'll learn the theory a little bit, and then we'll solve the entire question with memorandum revaluation account. Yes, it is illustration number 1919. And mind well, we don't have any question in exercise. Okay? On page number 169, even you can, for few students, it is a matter of relaxation. A note is given that memorandum revaluation account is given only for the information of students. Its concept and principal aspects are not expected in examination. Now here, what do you feel? Sir, this topic they are not going to ask in exams. See, they use the words expected. But sometimes unexpected matters are there. So if they ask, we have to lose the marks, nothing else. And we never believe in that kind of theory of losing marks. So let's go through it. First of all, a little bit theory. Actually, Memorandum of Association is a different one. This Memorandum Revaluation is nothing else. Let me first of all explain in my own way. Then we'll go to theory. See, in normal memorandum, what we are using on debit side, increase in liability, decrease in asset. On credit side, increase in asset, decrease in liability. Okay? That we are doing in a normal sense. Why? Because revaluation of assets and liabilities is must at the time of reconstruction. And admission is one of the steps of reconstruction. Okay? So in this chapter, even in next, that is retirement of debt, we will have revaluation account. Because that is also part of reconstruction. Because in this chapter, we are admitting a new partner. And so, at the time of admission, whatever the actual market value of assets and liabilities must be shown in the books. So, the new partner will get the exact effect of revalued asset or liabilities. Okay? Now, here in memorandum revaluation, we are, listen carefully, we are not going to change the value in balance sheet. We are not going to change the value in balance sheet. Means building 1 lakh, increased 10%. We are not going to increase that 10% in balance sheet. We are not going to show. What does it mean? Balance sheet will show only and only book value of assets and liabilities. Then what about the changing price? 10% increase, 20% decrease, bad debt reserve, or any other topic. One effect we will give in revaluation. Normally what we used to do, one effect over here, second effect over here. Okay? One in balance sheet, second in revaluation. But in this case, when memorandum revaluation is there, no effect in balance sheet. No effect in balance sheet. So one effect in revaluation, second effect is an adjustment, second effect is must. Second effect also in balance sheet, also in revaluation, not balance sheet. So one effect in revaluation, second effect also in revaluation. Yes, how is it? That is the beauty of this particular format. That is the beauty. And that is the concept to be understood. Mind well, again, let me inform you, they are saying it is not expected. But if they ask and say it is unexpected items, we can't do anything. So you know what we believe. We strongly believe not to skip anything, whether it is an expected question or unexpected. Must be prepared for everything to get desired result. Okay? Let's continue with the theoretical concept given in the textbook for 1 or 2 minutes, and then we'll continue with the practical solution. Okay? Memorandum, revaluation, account, page number 169. The partners may decide that the value of assets and liabilities will continue to appear in the books at their existing values. Existing value means book value, whatever the value already given in the question. Yet, no partner, see, if you show it at book value, naturally you are ignoring market value and the changes of it. So obviously it affects partners' profit or loss. So what they are saying, yet no partners may be put into any undue advantage or disadvantage because of changing values. In such case, an increase or decrease in the amount of asset and liability is recorded in memorandum revaluation account. This account is divided into 2 parts. This is the main portion. This account is divided into 2 parts. See, we are also going to do the same in this account. Okay? First part is similar to the normal revaluation account, and in second part, all entries of first part are reversed. So now I think you got the topic. That in first part, if we increase the value of asset, in second part, we will decrease the value of asset. So increase by 10,000, decrease by 10,000. Net, it is 0. The balance of first part is transferred to capital account of, this is most important, balance, that is profit or loss of first part is transferred to old partner's capital account in old ratio, and balance of second part is transferred to old ALL all partners means including new partner in new P&L ratio. Okay? Journal entries and all things are normal, nothing new. Let's continue with the question. Here, illustration 19. But actually they said, do it from the balance sheet of illustration 18. Okay? So we are continuing with illustration 18. Let's go through the question. Patel and Shah are partners in a firm sharing profit and loss in the ratio of 3:2. So old ratio is 3:2. The balance sheet of the firm as on 31/3/16 is as follows. Capital, loan, creditors, bills payable, and outstanding expense. Nothing specific matter. On the asset side, patent, land building, machinery, furniture, motor car, stock, and debtors less bad reserve. Here cash is not given. See, it is not a rule. It's not a rule that in memorandum revaluation you can't give cash account or you can't prepare cash account. Here in the question, cash is not given. So we have not prepared it. Okay? Because only one entry, that is of new partners capital. Nothing else is there in cash account. Still, if you want to prepare it, you can prepare of 3 to 4 lines. Okay? It's very, very simple. In adjustment, land bidding is to be appreciated by 20%. Actually, in this question, no need to take adjustments in balance sheet. Because in balance sheet, we are not going to change any value. Okay? Land bidding, 20% appreciated. Machinery depreciated 10%. Furniture valued at 60,000. Motor car is to be depreciated by 20%. Provision for doubtful debt is to be kept at 5,000. Patents are valueless. Outstanding interest on loan 6,000. Creditors and bills payable are to be paid 10% less. Unrecorded investment valued 20,000. Insurance premium which was debited to P&L account 30,000. Out of this, 10,000 is for next year. Okay? They are admitting Raval as a new partner for 1/5 share. And he brought 2 lakh as his capital. For goodwill, no adjustment, nothing is given. So there is no topic of goodwill in this question. Okay? Is that clear? Let's start solving the question. It's really an easy question. An easy question. Just it's a matter of understanding revaluation account with some difference. See, for solution of question, the normal pattern starting from liability side. Here, capital, Patel and Shah, 1,20,000, 1,30,000. So buy. Balance brought forward 1,20,000, 1,30,000. Okay. Then loan 1 lakh. Here on liability side. So first of all, partners. Capital. Patel, Shah and Raval. And Raval. Okay? No amount can be decided at present. Mentioned in the balance of capital account, we will write over there. Next, that is loan. See, directly in outer column, they are not going to check any adjustment for that. 1 lakh. Okay? Creditors, 80,000. See, we are doing this first because adjustments are basically not connected with this. They are not going to change any value. Creditors 80,000, bills payable 20,000. I know you are feeling a bit strange that we are not changing any value, but it's really easy. Help me. 20,000. Here in this case, the balance sheet is almost correct, except the new partner's capital, because if you have committed a mistake, capital account will be wrong. But these whole things are 100% correct because no change, just the copy of question balance sheet. This is the outstanding expense. $30,000. Okay? From the asset side, patent, land building, patent 10,000. Don't look at the adjustment. जो adjustment जो show तो definitely it will create a problem because in adjustment they say patent is valueless. So I am saying not to look at adjustment, just copy the balance sheet. Land building 140,000, machinery 70,000, land and building 140,000, machinery that is 70,000, furniture 80,000, motor car 120,000. Furniture 80,000. Motor car 1,20,000, stove 40,000, okay, debtors that is 21 minus 1, so 20,000. Take care. This question, debtors given to you, that is 21,000. They give budget reserve 1,000 in the question. Now, here we are preparing memorandum revaluation account. So you are not supposed to change. Any value of balance sheet. So better option is to write like this. Same like in our balance sheet. Okay? If you are not going to check adjustments, the things becomes very easy for you. But if you go through adjustments, then in each and every case, definitely you are going to get confused. Okay? So again, listen carefully. In memorandum revaluation account. No change in any asset or liability is given in the question. Just copy. Nothing else. Is it okay? If cash is there, then it's okay. But asset liability changes are not there. Because for cash we are preparing a separate format. Here we end the question balance sheet. Now, the admitted travel is the new partner for 150 share on 1/4/16. Raval brought 2 lakh as his capital. So he is bringing cash. So cash 2 lakh. Into bracket you can write for your reference Raval's capital. And the same 2 lakh by cash account 2 lakh. Okay. Now the picture starts. Yes. Now connected with memorandum revaluation account. First of all, before I start doing entries for revaluation account, check twice. Check twice. Is there any problem till this topic? Is there any problem till this topic? It should not be, because we just did the copy. We just copied the question balance sheet into answer balance sheet, except the capital amount. Because for capital, new partner, old partner are maybe having some difference due to profit or loss. Okay? Except that everything will remain same. Loan 1 lakh, creditors 80,000, bills payable 20,000, outstanding expense 30,000. On asset side, title, land building, machinery, furniture, motor car, stock, debtors, everything same. Cash account. Cash was not there in old balance sheet, but in answer balance sheet, it is there just because new partner Raval brought rupees 2 lakh as capital. Okay? Any problem? Now let's go through the adjustments. And all entries are there only in revaluation account. Okay? Just concentrate. Just concentrate. First adjustment, land and building is to be appreciated by 20%. Now the value you can check over here. 1,40,000. 20% of it increased. So buy land 28,000. 20% of 1,40,000. Second effect, I'll give you. Don't worry. Don't worry. At the end also I'll explain for 2 minutes. But at present, have patience, concentrate in the answer. Don't just write with me. Try to understand what I'm doing. Then machinery is to be depreciated by 10%. So on the debit side, to machine, 10% of 70,000. 7,000. Then furniture is valued at 60,000. Here furniture given is 80,000. So minus 20. Reduce. To furniture 20,000. Reduce. Motor car depreciated by 20%. So again reduce. 1,20,000 is the value. 24,000 is 20% value. To debt on motor car 24,000. Provision for doubtful debt is to be kept at 5,000. But that reserve, obviously true. Bad debt reserve. Now you tell me what to do about bad debt reserve. What to do about bad debt reserve? Should I write entire 5,000? Should I write 4,000? Should I write 1,000? क्या करना है? Naturally, it should be 4,000 because 5,000 is there, and still we are keeping 1,000 over there in the balance sheet. Okay? So bad debt reserve 4,000. Why we are keeping 1000? Because it was already given in the old balance sheet, patient balance sheet. So that we are keeping as usual. So out of 5000, if we keep 1000 as usual, 4000 is the adjustment factor. Patent are valueless. Patent 10,000. So again debit side. 2. Patent 10,000. Okay. Still few adjustments are there. Outstanding interest on loan 6,000. On liabilities at plus. So debit 2. Outstanding interest. The amount is 6,000. Then creditors and bills payable are to be paid 10% less. Creditors 80,000, 10% less, so 8,000 by creditors. Then bills payable. By bills payable 2,000. 10% less. Okay. Unrecorded investment valued at 20,000. So by investment, because asset increase, the amount is 20,000. Now the last one, insurance premium, which was credited to P&L account by 30,000. Out of this, 10,000 is for next year. 10,000 is for next year. What does it mean? Very simple. That is, if you are going 10,000 to next year, it is prepaid expense. It is prepaid expense. And prepaid always asset. So asset increase by 10,000. Asset increase by 10,000 by prepaid insurance 10,000. Here we complete all the adjustments. First of all, check the effects of adjustment from your end. You have to just check whether asset increase or decrease, liability increase or decrease. તમારે બીજું કંઈ જ કરવાનું નથી. You have to check the effect of revaluation, whether it is proper or not. Okay? On the debit side, machinery 7,000, furniture 20,000, motor car 24,000, bad reserve 4,000, patent 10,000, and outstanding interest 6,000. On the credit side, land bidding 28,000, creditors 8,000, bills payable 2,000, investment 20,000, and prepaid insurance, that is rupees 10,000. Okay? Now what to do? Nothing. We just wanted to close revaluation account. But as I say, revaluation account has two parts. Okay? So we are closing over here in the center. Is it okay? Whichever side total is bigger, whichever sides total is bigger, obviously should write over there. Here, debit side total is bigger. 27, 31 plus 20, that is 51, 51 plus 10, 61, 61, 71,000 is the total. Okay? Let me rub this because we need a little bit more space over here. We will do a little bit on the upper layer. 71,000. Okay? Same total. Over here, 28 plus 10, 38 plus 30, 68. So net the difference is only 3,000. By capital account, both the partners, old partner Patel and Shah. Three is to 2, I think so. Yes, the old ratio stays to 2. So 3 is to 2 means 1800, 1200. Okay? The same, because it is on credit side, here on debit side. 2. Memorandum revaluation account. 1800, 1200. Is it okay? Any problem? Now, the original effect of memorandum revaluation starts. It is reversed. So whatever we credited should be debited, and whatever we debited should be credited. Okay? First of all, let's take from credit side. So buy land 28,000. No change, huh? Fixed change, but yes, just to cancel the effect of increase decrease, we are doing it. And because we are cancelling the effect, see here land increased by 28,000. Here land decreased by 28,000. So net land bidding will remain same, 1,40,000. Okay? Land 28,000, just copy, nothing else. Not buy actually, I'm sorry. Copy, yes, but not by cancelling, by adjusting the accounting principles. So take care. 2 land, 2 creditors, then 2 bills payable, 2 investment, 20,000, 2 prepaid insurance, 10,000. Don't copy this. I am talking about SSLR. It is only, not profit or loss. Okay? From debit to credit. So buy machinery, that is 7,000. Buy furniture. We are just cancelling increase or decrease effect. It is 20,000, not 2,000. Then the pre-owned motor car. $24,000. Then credit reserve 4,000. Then patent 10,000 and outstanding interest 6,000. Okay? Now, if the total is 71,000, naturally the total is 71,000. Same total. But take care. On this side, we are distributing this 3,000 in new P&L ratio. So we have to find new profit loss ratio. Here, no specific thing is given for new P&L ratio. Only 1/5 that verified. Okay. So, what to do? The first method we did of P&L account, P&L ratio. Let the total ratio or total profit 1 minus Raval share 1/5. That is remaining share. Yeah, that is right. First method of P&L ratio. Simple method with tweak. Yes, so new ratio equals to the formula is old ratio into multiplied with remaining share. Okay? Old ratio Patel and Shah. Patel, Shah, and even Raval. Do it by your own. Afterwards I will do. But first of all, try. For Patel, what to do? Old ratio, that is 3:2. So 3/5 into multiplied with remaining share 4/5. So 3/5 into 4/5. That comes to 12 on 25. Next one is 2/5 into 4/5 for Shah and for Raval by multiplying to get the denominator equal. Okay? Let's do it. Patel. 3/5 into 4/5. So 12 upon 25. Shah, 2/5 whole ratio into remaining 4 upon 5. 2 4s are 8. So 8/25. And Raval, 1/5. So multiplied with 5/5 to get the denominator equal. The answer is 5/25. Is that okay? So the new ratio, new ratio 12 is to 8 is to 5. 12 is to 8 is to 5. Is it okay? Sure? Now, 3,000 of debit side, second portion, second part of revaluation. Yes, that should be distributed in this ratio. 12 is to 8 is to 5. So 2 capital account, Patel, Shah, and Raval. 12 is to 8 is to 5, total 25, 3,000 in that particular ratio. So the amount should be 14,000, not 14,000, 1,441 440 960 and 600 on debit side, so must be on credit side, by memorandum revaluation account 1,440, 960, 600. Okay? Here we have memorandum revaluation. Now it is a matter of totaling the capital amount. Very, very simple. 1,20,000 and 1440, only two amounts are there. So 1 lakh 21,440. Same 1 lakh 21,440. 1 lakh. The difference 19,640. To balance carried forward. So here 1 lakh 30,960. The same 1 lakh 30,960. By deducting 1,200, 1 lakh 29,760. And for this, an easy one, 2 lakh 600. The same. Okay, and obviously the difference will also remain same. 2 lakh 600. Okay. Next, this is the closing balance, so it should be written over here 1,19,640 and 1,29,000 and then 2 lakh. Over total of this three, that is 4 lakh 50,000. Here no cash account because only one transaction of new capital is there, 2 lakh. So directly the total, that is 6 lakh 80,000. Okay? Check price. This was memorandum revaluation account solution. Check price. Then I am saying something different. First of all, check it from your end. See, nothing is wrong now. I am saying something different does not mean you should confuse that something is tricky. Sir has done something odd. No, nothing. I am just going to give you a small trick that whether you are correct or wrong, in 99% case, you can come to know by using that trick. Okay? Any problem in memorandum revaluation? See, the rest of the things are really simple. Again, very, very quickly, let's go through not the entire question, but the concept of revaluation. First of all, you must draw revaluation of double size. First of all, how can we come to know? See, there are two ways. One, in the question itself, it is clearly given, prepare memorandum revaluation account. That's why you should read, you must read the question properly. One way, they clearly use this word, prepare memorandum revaluation account. So we can easily understand. The other way, they will not use these words, prepare memorandum revaluation. But they will give you an instruction. Partners have decided not to change value of asset and liability. Partners have decided not to change value of asset and liability means memorandum revaluation account. Because when we are not changing the value, means we are not giving one effect of adjustment in balance sheet. So naturally, both the effect must be given in revaluation like this. Okay? So you can use this kind of words. Partners decided not to change value of assets and liabilities. In that case also it clearly means memorandum revaluation account. Okay? Now in that case what you should do? The pattern will remain same. Start from liability side, balance and reserve and everything okay. Then for liabilities and assets, just copy the question in answer balance sheet. Just copy the question without using your brain. મગજ વાપરશો તો હેરાન થશો. Just copy the question. Okay? After that, new partners capital, if it is, do it. Then go for adjustments of assets and liabilities. Normal effect, plus or minus. Okay? Complete it. In between, in middle. Find out profit or loss. Distributing old partners old ratio. So here half portion of memorandum revaluation is over. Then just by changing word to and by, copy credit side on debit, debit side on credit, except profit or loss. बाकी બધું જ copy. Okay? Find out new period ratio if not given. If it is given, it's very okay. This last portion of memorandum revaluation should be divided, should be transferred to all all partners in new P&L ratio. Here it is 12 is to 8 is to 5. Okay? Just give opposite entries in capital account, then close capital account, transfer to balance sheet, and balance sheet is over. Okay? Any problem? Sure? At last, the trick about what I was saying. Here, check the total. See, check the total of question balance sheet. Check the total of question balance sheet. It is 4,80,000. Question balance sheet from total 4,80,000. So without solving, we can say the answer balance sheet total must be 6,80,000. I know you get the topic. Some of the students got that. How is it? Without solving it, we can say this is 6,80,000. Why? Because except cash, all the things, assets and liabilities will remain same. Okay? So cash 2 lakh is added, and the same 2 lakh added in total capital. Previously, the capital was 2,50,000 in question balance sheet. I am not talking about internal matters. I am talking about the amount column. Previously, it was 2,50,000. Now, new partner bring rupees 2 lakh. So total 2,50,000 plus 2 lakh, 4,50,000. So that 2 lakh added on liability side. So from 480, it comes to 680. Cash account was not there in old balance sheet. It is there with 2 lakh capital. So that 2 lakh added. Net it is 6,80,000. Is it okay? So this kind of tricks will give you sometime confidence that yes, we are correct. Okay? So here, finally, we are ending this chapter. Not almost actually. Exactly after 28 lectures. 28 lectures. Okay? Don't feel like that every time we are going to take 25-30 lectures. In retirement also, in every chapter. No. In admission it was needed. Because all formats we were learning for the first time. Now in next chapter, this much time is not required. I'm not going to explain revaluation again. I'm not going to explain what is capital account. Nothing. Directly we are going to start with theory a little bit, then short questions a little bit, and switching over on long questions. Okay? So for admission, it's bye-bye in this lecture. Next lecture, we are introducing retirement or death of a partner. Okay? I'm sure you are going to work very nicely for this chapter, because this chapter will give you 9 marks of desired mark sheet. Yes, in the bank of mark sheet, you must deposit full 9 out of 9, and that's what we wish. So, wish you all the best for the revision work, and obviously do take care. In next chapter also, we are having the similar formats, and that's why the revision is even more important. Okay? Till next chapter, till next session, take care of yourself, stay happy, stay safe, and as usual, have a nice day.